Hello, everybody. Welcome to another episode of Simply Bitcoin IRL. Today we have, I would consider one of the macro heavyweights on Bitcoin Twitter. We have Dr. Jeff Ross. But before I bring him on stage, I want to give a shout out to the awesome Bitcoin company that powers the show. If you haven't already done so, go check out swanbitcoin.com. Best place to buy Bitcoin, built by Bitcoiners for Bitcoiners. They incentivize dollar cost averaging and self-custody. Go check out swanbitcoin.com today. Anyways, I want to bring Dr. Ross on stage. How you doing, Doc?
I'm doing awesome, Nico. How you doing?
Good. I'm hyped. I'm hyped that you're here. And coincidentally, you came on the same day that of the Fed meeting, right? And I'm just reading a headline here: Fed approves smallest rate hike since March and nod to improved inflation outlook. So the question that I have for you, Dr. Ross, is: Are we out of the woods?
So for now, yes, absolutely. So I was used to be affectionately known as Dr. Bear. I am no longer bearish. I flipped during the second week of January. Why did I flip then? Because it takes my indicators a little bit to confirm market bottoms. I don't try to time market bottoms. I wait till they're confirmed. So that's where we were. I think everything. I'll give you my bull thesis. So I think everything changed in October. What changed? Basically everything. So liquidity, global liquidity, which is something I watch closely, both in the U.S. and internationally, bottomed in October and then started rising again. Most people don't know that. Most people still think we're kind of in quantitative tightening, but there's actually sort of some behind the scenes quantitative easing going on. You don't have to take my word for it. You can take the dollar or bond yields for it, or risk assets for it, or Bitcoin for it. All of them had a major change of direction basically in October. So the dollar peaked, has been coming down. Bond yields peaked, they've been coming down. Risk assets bottomed, they've been moving higher. Bitcoin actually took like a month longer, but I completely blame scam bankman fraud for that. For sucking Bitcoin down lower for longer. Otherwise, I think Bitcoin would have bottomed in October as well. But anyways, nevertheless, it did bottom in November. It's been moving higher ever since. Everything that I look at from a short to mid-term kind of trading standpoint is bullish. I tell people this is a bull market until proven otherwise. The burden of proof now rests on the bears. They have to prove that this is a bear market. They have to prove that this is a bull trap, and that's what they've been saying on my TL for the last 2 weeks. This is a bull trap. This is a bull trap. You're stupid. You're going to get crushed. And I'm like, great. Let's see it. Like if I'm wrong, then we'll see the prices go back down significantly. Powell got on today. This was sort of the last gasp, I think, for the bears. They were hoping Powell was going to come out and be just super hawkish, and he was going to be like, you think this is over? It's not even close to over. We're going to raise rates so high and so hard, you're going to go down. He didn't do that. He tilted dovish. He basically said, we're raising 25 bips today, which they did. We're probably going to raise again another 25 bips. And he said, now the discussion is no longer what is the rate, the pace of the rate hikes. Now it's the extent of the rate hikes going forward, meaning how long do we continue hiking rates? And then he spoke multiple times during the Q&A session afterwards, saying, we're seeing some good progress on inflation. We can't let it go to our heads. We still have to make sure this is continuing to go in the right direction, but it is going in the right direction. So we can sort of let our foot off the pedal, ease up on the gas a little bit as far as raising rates. So and then the markets responded that it's not me making it up. If anyone was paying attention to the markets and or just to Bitcoin, after he spoke, the markets shot higher, and they believe that this is for real. So I think this bull market is for real. The one last thing I'll say is, many smart people are waiting for, we all know that a recessionary bear market is still somewhere ahead of us. The trick is nobody knows when it is, right? So when the Fed pauses, we get what's called, and I just, for lack of a better term, call it the Fed pause rally. So when the Fed goes where they're hiking, and then they pause, usually what happens, historically speaking, is risk assets catch a bid. They shoot higher. The last time this happens in significance was back in 2006. The Fed had hiked up to 5.25%, the federal funds rate. And that was in, I believe, June of 2006. And from that point to October 2007, while the Fed paused their rate hiking cycle, NASDAQ stocks went up 53%. That's pretty impressive. And then they peaked there. And then in the summer of 2007, the Fed started kind of panicking and started lowering rates at that point. They pivoted. And then we all know what happened after that from 2007 till March of 2009. Then basically risk assets, equities just got annihilated and they got hammered. So I still think that's somewhere ahead of us, but we're not there yet. Right now, we're in the Fed pause rally. This rally in risk assets, and I also believe a even more significant rally in Bitcoin and Bitcoin related equities, is for real, and it could last longer than most people think. So you might think it's only going to last a week or a month. That could be. But it might last for 6 months, 12 months, 18 months. We just don't know. And the last thing I'll say, and sorry, this is very long-winded. The last thing I'll say is that what smart people are looking for a credit event, right? It's the credit events that happen that basically force the central banks into action. We know a credit event is going to happen because we can look at something called the high yield option adjusted spread, the OAS. That is the difference. It's the spread between the yield on high yield or junk bonds and the yield on treasuries, the risk-free rate, right? Even though we know it's not risk-free. So the difference between those two, when you're in a bullish environment, it shrinks. It gets smaller and smaller. Basically, they're not concerned about risk as much, so they buy junk bonds. They buy things that are riskier to get a little bit higher yield. When people get scared that we're getting closer to a credit event, that premium, the option adjusted spread, stops going down and actually increases. It blows out or it widens. That always happens not always, so take it with a grain of salt, but it almost always happens heading into a recession that you'll start to see that spread widen. That's when we're getting closer to a recessionary bear market. That's when we're getting closer to the Fed pivoting and going flat out dovish, like lowering rates. And there's no signs of that right now. In fact, the OAS, the high yield OAS, it peaked in June of 2022. And it's been doing this ever since, and it's getting narrower and narrower. That is bullish. And then the last thing, sorry, that was supposed to be the last thing. The final last thing is the VIX, volatility. Volatility has been high for most of 2022, meaning between 20 and 30 or even higher than 30. When it's in that range, that's a trader's paradise. That is not a buy and hold environment. That's where you get wrecked. You get chopped up if you're just sitting buying and holding. And so when it's below 20, I like it when it's below 19, actually. When it's below that, that's sort of a regime shift, and that turns more into a buy and hold environment, more into a bullish environment for risk assets. After Powell spoke, the VIX went from in the mid 19s. Now, currently, while we're talking, it's down to 17.87. It hasn't been that low in a really long time, like since 2021. Everything I'm talking about, everything I'm looking at, all of the indicators are bullish. It's a bull market until proven otherwise.
Oh man. So you weren't kidding around when you said that you went from Dr. Bear to Dr. Bull. Definitely Dr. Bull right now. So I got another question for you, Doc, right? Which is and you touched upon it earlier, right? This doesn't mean that the recessionary bear market was avoided. It just means that in the medium term, you see that we are in a bull market. Is that correct?
Yes. So I think the writing is still on the wall. When you see the yield curve is inverted as it is and some other issues that are going on, I still think the recession lies ahead of us. We just don't know when that's coming. And so you can sit on the sidelines if you want and be pessimistic and wait for that to happen. But in the meantime, you might miss out on a pretty face ripping bullish run in equities and especially in Bitcoin.
Does that mean that Bitcoin bottomed? Do you believe that we hit the bottom?
At this point, I do. Yes. In fact, and just so you guys know, I made a bet with Anders of Toxic Happy Hour. I said that it hadn't bottomed yet. This was, I think, in December or maybe early January before I had pivoted. I said it hadn't bottomed yet. He says it had. I think I'm going to lose that bet, and I'm going to owe Anders a beer at Bitcoin Miami in May.
And I hope to see you there as well,
Yeah,
Dr. Ross.
Absolutely.
So interesting, very interesting. So what would it take specifically in your indicators and what you're looking at? What would it take for you to change your mind? Because I'm hearing also, I think it was a Cointelegraph article, and I think it was Lynn that was mentioned in it, where she was making the case that, hey, hold on to your horses, and she referred to the 2023 recessionary environment, and how that was going to be terrible for what the market views as risk on assets. What are your thoughts on that?
Well, first of all, it confuses a lot of people because what people sometimes fail to realize is that the markets are different than the economy, right? So the economy may be tipping into a recession, but the markets respond differently. They usually front run it, actually, and so I would say that throughout 2022, the equity markets and Bitcoin were seeing what was coming. They were seeing the writing on the wall that the economy was slowing. We were heading into contraction mode for manufacturing, and then now services. Housing rolled over, all that kind of stuff. So those are two different things. So they can be on two completely different schedules, although they're sort of related over time, but they just sort of feed off of each other a little bit differently. And the markets always look ahead. I would say that a recession is definitely coming. It may actually already be here. We don't know until the NBER blesses it and says that we are officially in a recession. So who knows? We find out from them later what the answer is, which is kind of funny. I don't really care about that. I care about what are the markets doing and what is price action doing. And again, so even if the economy looks like it's getting weak, and I think it is, earnings recessions look terrible. Their layoffs are starting to increase. It's hitting big tech the hardest, obviously, but it's starting to spread out further into other parts of the economy where layoffs are starting to happen. So we should start to see unemployment numbers start to rise. Um, all of that stuff still is ahead of us somewhere. But again, to my point, unless there is some sort of major event like a credit event, it's unlikely that the Fed will be forced to pivot and start lowering rates. And until they do that, it's most likely that risk assets will continue to catch a bid. And Bitcoin, which is not a risk asset, but it does catch a bid alongside of other risk assets. Bitcoin is the great absorber of liquidity. So as long as liquidity is expanding and all these metrics are pointing upwards, Bitcoin should do pretty well. What will I watch? I'll watch all the things that I just mentioned that I'm telling you are bullish right now. If those things pivot and start to turn bearish, then I'll turn bearish, right? So I'll look at the high yield, it's the OAS, the option adjusted spreads. I'll look at the VIX. If VIX starts spiking, if the dollar starts to spike, if bond yields start to go down because people are flocking into bonds because they know a recession is coming, all of those things you can look at, and it kind of gives you clues that we're heading into the early stages of a recessionary bear market. I'm just telling you, we're not there yet. We have a ways to go until we get to that point.
Interesting. So Dr. Ross, I think that we as Bitcoiners, we're always bashing on the central banks about how it's a scam, et cetera, et cetera. But to play devil's advocate a little bit, and I'm very curious to hear what your thoughts are on this, it seems to me like they pulled off they pulled off all this money printing, and it really didn't have a crazy effect, or at least the effect that a lot of Bitcoiners were anticipating, which is this crazy environment. Am I speaking too soon when I say that?
So yes and no. So first of all, kudos to Powell, right? I mean, he's learned a lot in his tenure as the Fed chair. He made some serious blunders early on in his career with as the Fed chair. I think the number one job of the Federal Reserve, and of especially for Powell, the Fed chair, is to manage expectations, and he even says that. And I would say, at least as of right now, today, February 1st, 2023, he's done a good job managing expectations. The markets basically weren't surprised to the downside. There hasn't been a major catastrophe yet. It's possible that he pulls off a soft landing, quote unquote. It's all of that is possible, but we still don't know how this ends, right? We still think that somewhere down the road, because of all these rate hikes that they're doing and all the economic slowdown, everything that's going on, at some point we have to pay the bill, and at some point we may actually teeter into a severe recessionary bear market. A severe downturn could be on par with 2008, 2009. So I think it's too soon, to say he pulled it off, or to or to say we're through the worst of it and there was a soft landing. I still don't believe that this is it. Like we're out of the woods now and in the clear, and that risk assets are just going to run. I think they run, but I think their time is limited. So it's sort of like musical chairs. The music is playing right now. everybody's dancing, risk assets are running, Bitcoin's ripping. At some point, it probably ends. It probably ends with some sort of credit event, and things head much lower at some point. I just don't know when it is.
Interesting. And okay, this is fascinating. So, and you mentioned, because that was my follow-up question, right? Which is, do you believe they're going to pull off the soft landing, which you just answered? But my follow-up to that is, if they do pull off this so-called soft landing, wouldn't that defeat a lot of the narratives that, to play devil's advocate, of course, wouldn't that defeat a lot of the narratives that the Bitcoiners are saying about the evils of central banking? Like, it looks like they might have pulled it off, so to speak.
Well, what do you say about central banking, right? I mean, so first of all, the system we're in, right? We have an asset called the US dollar, which is fiat, which is based on nothing, which is by design this whole expansionary credit-based monetary system, this Keynesian economic experiment. It's designed to increase and increase and increase forever. And the individual unit, called the dollar, is designed by design to decrease in value forever and ever and ever until people completely lose confidence in it and it goes to zero and it's worthless and the system explodes and it starts over and we start over with a new system. I think that's going to be a Bitcoin standard, but that's how every fiat system ends, right? And that's what all central bankers do, is they help facilitate the ever expansion, the ever expanding credit empire that is fiat. So the US government is the strongest of all the governments, right? But all of these governments, they basically borrow and borrow. By the way, this would be one little point. We make it sound like the central bankers are the great evil group of this. I think the biggest problem, actually, and what people don't talk about enough, is governments themselves. They have a borrowing problem. They never stop borrowing. And that's what continues to inflate. It's this credit expansion. And it's basically creating dollars, creating credit out of thin air that's chasing after a limited amount of resources. That's what causes this devaluation. And the Federal Reserve and central banks are basically the buyers of last resort, the buyers of credit of last resort. So at some point you get to the Japanification, right, where they have these bonds, the government continues to borrow money, they continue to issue bonds. At some point the markets are like, you know what, I don't want your dumb bond because I don't think you're going to pay me back in sound money. It's not worth the interest rate. So what happens? The central bank, the Japanese central bank, steps in and they're actually now buying more than half of the Japanese government bonds. That's the inevitable consequence. That's what happens in every economy that has a central bank. Eventually, the central bankers become the buyers of credit of last resort. They're monetizing their own debt. That's basically the end stage of the fiat system, of the credit-based system. When there's no more market for it, and you're just sort of internally buying everything. That's the point where people say, you know what? Not only do I not want your bonds, I don't even want your currency anymore because it's depreciating so quickly. I need to get my purchasing power out of this system and into something else. And of course, that something else is Bitcoin. It used to be gold, but now it's Bitcoin. So I don't know if that even answered your question, but I think that, well, I'll stop there.
No, it totally does. Where, as in, yes, they might have pulled it off in the short term, right? But the judge is still out on that. We don't know, right? We don't know. But let's say hypothetically they pulled it off. That doesn't mean that long term it's a viable system because of how it's architected. Would that be correct to say?
Absolutely. We all know how it ends. We all know how the story ends. It ends in hyperinflation. Currency goes to zero. The system implodes, and then you start over. Usually there's a huge coup, there's a big government transition, there's a world war, there's something, and then you start out on a new system. This time we have Bitcoin, we have this parallel monetary and financial system, so we can all flock to that for our safety valve. But we all know how the fiat story ends. So maybe they won this round, right? But they're definitely, absolutely, for sure, 100% going to lose the war.
Gotcha. Okay, so and I've never seen you tweet something like this, Dr. Ross. So that made me feel really, really bullish, because I think, and I had Jeff Booth on a couple weeks ago, and one of the things that we ran into was, I think that all Bitcoiners, we kind of reached the same conclusions on many things. We're just coming at it from very different angles, right? But it's you start to like have these realizations. And one of the things that you tweeted out the last couple of days is you mentioned how the nation state is this like model that basically extracts the wealth of their citizens. And I think that I've noticed this the most, Dr. Ross, by being a Bitcoiner, right? I think that if you're still in the fiat matrix, so to speak, it's very difficult to see it. Like, in fact, I would even say the politics of money, like the political process, right? You would even say, oh, that's necessary. But I think as Bitcoiners, we're seeing it from our perspective. We're just like, that is the most archaic thing I've ever seen. We have a more efficient system. So what do you think about that? What are your thoughts on the nation state system? Are we, do you agree with the theory in the sovereign individual that information technology is basically going to at least reshape the nation state how it currently exists today? What are your thoughts on that?
Oh, absolutely. So have we reached peak centralization, peak monopolies of on power for nation states? Absolutely, I think we have. It's still going to take a while though for things to change, but I absolutely think we're in a massive paradigm shift for all of that. It's kind of hard to see when you're in it. And to your point, when you have a fiat brain, it's really hard to see any downsides to it. It's hard to see that. It's hard to see how ridiculous it is. Excuse me. And so we have to help the fiat brains, right? We have to help them because they haven't been orange pilled. They still, to them, it makes sense that, oh, we first of all, let's make it seem like we have some sort of fiscal self control, and we'll create this thing called a debt ceiling. That'll make it sound like we have control over our spending and we're limiting our spending and we're being prudent with our spending. Pure nonsense, right? We talked about this on a Cafe Bitcoin a week or two ago, and I was using the analogy. The debt ceiling is basically like clouds in the sky. It looks like a ceiling, but you just poke right through it, right? You go right up above it. It's a false ceiling. It's a false narrative. It will go up forever. It will go up forever until basically the system dies, till you have hyper Bitcoinization, till everybody loses confidence in the currency. That's always how it ends. It's just 100% certain. Death, taxes, Bitcoin, and the death of fiat. It's for sure going to happen. And so, where does that leave us? It leaves us with we're in this system where we need to help people to understand that this is nonsensical. It doesn't make sense. It doesn't make sense if you have, if your debt to GDP ratio is 120 or 130 or 150%, or Japan if you're over 250%. It literally makes no sense at all that you would try to continue to borrow more money, that you would borrow your way out of massive debt. But that's how the system works, and that's how it trains us. So, Bitcoin obviously runs on a completely different set of rules. That's not how it works. It's not a debt-based system. It's an equity-based system. It's a savings-based system, completely different. Debt really doesn't work very well, by the way, on a Bitcoin standard. Debt works well on a fiat standard. Debt works well when you have a currency that depreciates over time, because the mathematics make it feasible to pay it for 10, 20, 30 years to pay a home mortgage or something like that. When you're on a Bitcoin standard, it doesn't work nearly as well, because you have to pay it back in appreciating currency, which makes it harder and harder to pay back debt over time. That's why I think we're going to have way less debt in the future, by the way. But as long as we have a fiat monetary base alongside of Bitcoin, this kind of weird hybrid monetary system that we have now, and I think will continue for quite some time, it does make sense mathematically to borrow if you can to get that fiat debt in order to obtain more Bitcoin, and basically do a put the kibosh on fiat money, right? I'm totally blanking on the term right now. Shoot. But basically, where we're sucking the purchasing power out of fiat currency and pulling it into Bitcoin. Speculative attack. Thank you, Opti. Yes. So doing that speculative attack on fiat currencies, I think, is going to increase in this coming decade, and it's going to transfer that purchasing power into Bitcoin.
Absolutely. And shout out Opti. Wow. Coming in.
Thanks, Opti.
Coming in to save the day. Okay. So Dr. Jeff Ross, so you mentioned something in there, and to play devil's advocate, of course, the argument against that would be, hey, look, with less debt, there's less economic expansion. What would be your response to that?
That's nonsense. All that a credit-based system does is it accentuates the booms and the busts. If you don't have a credit-based system, if you don't have fiat money, You just have steady growth that goes along with the kind of the increased productivity of humanity over time. So as long as there are humans who are being productive, you are going to have economic growth over time. It's much more stable. You don't have huge booms because everybody's borrowing money to do stuff, and then the busts because people can't pay it back because they got over leveraged. That's just human nature, right? You can't resist it. And central banks, by the way, I should add, were created to make booms and busts less. They're supposed to take the punch bowl away during the boom times and add to the punch bowl in, put a new punch bowl in when we're in the bearish times. But what happens is banks and even central banks, which is insane, they just add fuel to the fire during the boom times. They continue to make money easier and easier and credit more and more and more accessible until we get to these just insane asinine valuations in everything. And we just had the everything bubble that peaked in the fourth quarter of 2021. Equities were at all-time high valuations. Bonds were at all-time high valuations, the yields of which were actually negative, which is insane, doesn't even make sense. Real estate was at all-time high valuations. Private equity was at all-time high valuations. That's what happens when you have central banks who are not doing their job, who are not taking the punch bowl away, who are adding to the speculative nature. And then in the bearish times, right? Banks, what are they doing? Banks, they should be out pushing lending as much as possible right now. They should be trying to reverse these recessionary conditions. But what do? They go into self-preservation mode. They put up walls around themselves. They go to huge cash positions. They don't make loans to anybody except the people with the highest credit scores. It's a ridiculous system, and it accentuates the boom and bust cycles, makes it much worse for humans, kills savers. The speculators, they're euphoric during the boom times and just devastated during the bear market times. It's awful. I hate it. And so, anyways, Bitcoin Standard will change all of that because you won't have those huge boom and bust cycles nearly as much. Humans are still going to do stupid things. They're still going to find ways to wreck even a fantastic system. But overall, the system will be much more stable. And as long as there's human progress, as long as productivity gains increase over time, the world will see productivity gains. So yeah, that's my point on that.
So and I'm very bullish for this Bitcoin standard. But one of the things, Dr. Jeff, that I've noticed, right, is that a lot of people, they spent the majority of their lives in the fiat matrix, have a hard time, in my experience, transitioning to a Bitcoin standard, right? Very, very difficult. I would say can't do it less than 9 months, right? You got to go through like all these aha moments and just like, oh my God, and realizations and, et cetera, et cetera. And specifically in the West, really, in the developed world, where people have this financial privilege of living in a country that has a relatively stable fiat currency, right? You pitch Bitcoin to someone in the global South, and they're like, "Well, where do I sign up? That sounds great. That sounds beautiful." And I think that they're more prone to government's response, as much as they say this wasn't a response to Bitcoin. I really believe it was government's response to Bitcoin, which is the central bank digital currency. So my question to you is, does that matter that a percentage of the population is going to be basically socially attacked to adopt, this failing currency versus something like Bitcoin? And I'll tell you what, Dr. Ross, specifically, like, I talk to no coiners, and they're completely asleep and oblivious to this. And I think it's like, I'm a big believer in incentives because they're not incentivized to adopt something like Bitcoin. And you actually tweeted this out, and this is what I wanted to talk to you about, which was Bitcoin mass adoption won't occur until Bitcoin becomes much easier to use as a medium of exchange. And number two, using Bitcoin to buy goods and services does not cause a taxable event. So specifically on number one, I completely agree with you. Apple Pay is so easy, right? You click two buttons on the side of your phone. It's like ding, and it has a little haptic and it makes you feel good, right? Bitcoin is a little bit, you can't deny. I'm not saying this isn't going to change, but at this moment in time, it's a lot less convenient to use in countries that have developed financial systems and stable fiat currencies. You can't deny that Bitcoin is less convenient.
Yeah, and what's funny about that tweet that you're bringing up, I think I tweeted that yesterday. I'm getting a ton of kickback from Bitcoiners that are like, "You're crazy. It's super easy to use. Layer 2 is easy. Lightning's awesome." And I'm like, "Well, it is, and it's coming, and it's developed." And by the way, I'm super hardcore pro fanatic Lightning. Like Lightning Layer 2 is awesome. It's going to change the world. It's going to be what's awesome about Bitcoin. It's going to make it a very easy to use medium of exchange. We're not there yet. The people who are developing layer 2 solutions, Jack Mallers, Jack Dorsey, all of these people who Lightning Labs, all of the people who are doing this stuff, they're like, "Hey, this is really hard to get this infrastructure built out so it's just as easy to use as credit cards, as Apple Pay, as PayPal." We know that if we want to make a payment, like if I want to pay you, Nico, and send you some sats right now, super easy, right? But my whole point is, to your point, it's not convenient. It's still not accepted around the world yet. I still can't walk into my grocery store and just go bling, I'm paying for my groceries. I can't walk into a restaurant and say bling, I'm paying for my food. They don't accept it yet. So that's all I'm saying about that. But what's cool about that is there are a ton of really smart people working on that right now. Like Jack Mallers, I just listened to him today on Bitcoin Magazine. He's working on that right now, and they're working on it on the point of sale points, so that if we go to grocery stores and restaurants this year, we should be able to pay with Bitcoin on the Lightning Network. Should be easy. We're just not there yet. That's my only point with that. And then what most people left out is number two is the fact that it causes a taxable event. One, that's ridiculous, right? Because the government here in the US at least treats Bitcoin as property. So anytime you sell it, you're creating a taxable event. That's frustrating. And two is, even though that's an issue, it wouldn't be as big of an issue if it weren't so dang hard to keep track of your cost basis, which you need to do your taxes, which is frustrating and annoying. And so if we have to work through those kind of things, and it's going to take several years to get to that point where it's as easy and seamless to pay with Bitcoin as it is to pay with Visa. That's the kind of stuff I'm talking about. I'm not, a lot of people are getting on my case about that, saying, "Oh, Bitcoin doesn't need that to increase in price." I agree with you, right? The main thing Bitcoin solves is the store of value problem, right? When you have a perfectly scarce, you guys, I literally talk about this all day, every day for the last 6 years. It's what I do. But I'm saying that if you want to get grandma and grandpa and Uncle Ned into Bitcoin, you have to make it as easy as Apple Pay for them. And we're nowhere near that point yet. And that's when you get the mass adoption and the worldwide adoption. I still think we're years away from that happening personally. And that's good. If you're a Bitcoiner now, right, and you're a very early adopter, you want to get in before the rest of the world figures it out. That's how you make these crazy gains while we're still in price discovery mode. That's my whole point with that tweet.
Interesting. And let's talk about part number two, right? Which is, and I think that this is another big hurdle. Now, like it's extremely difficult for them to enforce this, but it doesn't mean it's still not against the law, which was technically how it is right now. And this is why I believe that legal tender laws are such BS in the first place, right? Let's talk about the fact that right now, how it stands, at least specifically in the United States and honestly in Europe as well, right? Where the transaction of Bitcoin is considered a taxable event, specifically if you've had a gain, right? What are your thoughts on that? Because you know what, and I think this is a more difficult problem to solve than number one, Dr. Ross, because they're going to have to admit on that problem that, hey, no, your money's designed to lose value. Versus if they allow that, it's like, no, money can lose value. And I think that if you open that box, you can't put it back in. It's a very, very difficult question for them to answer.
Right. That's what makes it such a tricky issue, too. It's the government basically admitting that Bitcoin is legitimate also, which is not something they totally, especially here in the US, right? We're the world's reserve currency. They want to maintain that status for as long as possible. And so I think that it's not going to come from the federal government anytime soon. I think it's going to be kind of a organic, ground up, basically a state-based movement. So I think states in the U.S. will start to push that. We're going to see countries like El Salvador and other things push it as well. But that's kind of the issue is when do governments, playing with the game theory, when do they acknowledge that Bitcoin is a legitimate competitor to their currency, and when do they admit that their currency is designed to depreciate in value over time versus this Bitcoin thing, which is perfectly scarce and literally designed to appreciate in value over time? And how do you kind of balance that if you're a legislator? So it's going to take some time, and this is we're in the difficult phases, and I think that's why it gets so much pushback from the kings and queens of the current fiat system, the Jamie Dimons and the Warren Buffetts and Charlie Mungers and the Elizabeth Warrens and all these people who are very opposed to Bitcoin, and all the statists who hate Bitcoin because they think it undermines the dollar. You know what? They're right. It does undermine the dollar, and it's going to, at some point, somewhere probably far in the future, going to replace the dollar. But for now, the best thing that I think government officials can do and regulators could do is to find ways to play nice with Bitcoin, to figure out how to take advantage of it for their own sake, for their own selfish reasons. It's here to stay. It's not going anywhere, and so the best thing they can do is figure out solutions with it and not try to ignore it and pretend it doesn't exist.
100%. It's like this thing is not going to go away, right? It's not going to go away, and I think the faster they come to terms with that, the more beneficial it's going to be for their citizens. The more beneficial it's going to be for them as well, right? It's kind of like an ostrich burying its head in the sand. It's like, no, this thing doesn't exist. Okay, so this is a question that I asked Lynn and I asked Jeff Booth, and I'm very curious to hear what your response is to this, Dr. Jeff, which is inflation necessary? Because that is the next thing. Like, that's the next narrative, right? And it's so entrenched in people. Dr. Ross, I watched a video of Justin Trudeau just criticizing Bitcoin because it's short-term volatility. But the words that he said was like, his political opponent, he was accusing him, is like, people actually thought they could opt out of inflation. And that wasn't the part that surprised me. Obviously, he's incentivized to say that. But it was a lady in the audience's reaction. She laughed. She's like, ha ha ha, that is so true. And it's so entrenched. It's so entrenched in the mindset of people. And Bitcoiners are believing this to be honest, it's a radical idea where it's like, not only should money not steal from you, it actually should increase in purchasing power over time. So is this world economy, is money, is it possible? Can it happen without inflation baked into it?
Well, the reason why this is so emotional and causes people so much stress is because if you are born and bred in the fiat system and you have a fiat brain, they're actually correct. You have to have inflation if you have a depreciating currency. If you have an ever expanding credit based system, you have to have inflation in order for that system to work. Deflation will cause that system to break. So they're actually right. And that's where there's so much confusion. But what they don't understand is you don't have to have that if you have an appreciating currency like Bitcoin. And that's my whole point for all of that. When you have a depreciating currency, the natural solution is a credit-based system. When you have an appreciating currency, credit-based systems don't work very well. In fact, they'll probably fail, and they'll wreck people who try to take out loans. Because of the appreciating nature for it. So it's two completely different systems. And if you're only fiat brained, if you're a fiat brain statist, and there are really smart people out there who are like this close to Bitcoin, but they cannot get around that inflation issue because they think the whole world revolves around some truth that you have to have inflation. And they're right. They're right if you're in a fiat system, but Bitcoin is a totally different system, right? So that is just false. I get that a lot all the time. People say, oh, so if you're on some sort of deflationary currency, what are you going to do? Tell somebody who did a good job working that next year their salary is going to go down? And they look at me like, are you the stupidest person I've ever met? And I would say, yes, because what's the other side of that? What's the other side if you have a deflationary currency and you see that you actually start paying people less and less? What's the other side of that coin? The other side of the coin is that means costs of goods and services are going down, probably going down faster, right? So you're in a system, instead of seeing the cost of healthcare, the cost of education, the cost of groceries, the cost of picket, whatever you want to name, movies, anything, that lava lamp right there, cost of lava lamps going up year after year. That's what you have in an inflationary system with a depreciating currency like we have now. That's what we're all used to. I'm 48. When I was a kid, Snicker bars cost 25. I still vividly remember Snicker bar because I could use a quarter and I could either buy a Snickers or I could play a Donkey Kong video game at this little snack shack that I used to go to. That's what we're all used to. We think that's normal. We think you have to have that. We think that in order for an economy to expand, that you have to have an expansionary monetary supply. I hear really, really otherwise smart people talk about this, and I'm just telling them that that's the fiat brain thinking. When you're on a Bitcoin standard, it's completely false. Bitcoin has built-in velocity into it moves at the speed of commerce. It moves faster than the speed of commerce. You don't have to have an expanding monetary supply in order to have an expanding world, expanding commerce, expanding economy. Bitcoin takes care of that problem, and prices will get cheaper over time. If your money supply is static and your economy is growing, you're going to have decreasing prices over time, and that's a good thing, right? And the only people who it's not good for, by the way, are people who benefit currently from the current fiat standard, from the current credit-based system. And I get that. That's real. If you own a credit-based business, you're just like, what are you talking about? Why would we ever want to see credit go away? Right? If you're a politician and you benefit from the Cantillon effect, why would you ever want that to go away? If you're the king of the biggest banking empire ever in the history of the world, like Jamie Dimon is, why would you ever want that to go away? You wouldn't. You would hate it. You would hate the alternative. That's why they say the things they do. That's why they hate Bitcoin so much. You do not have to have an expansionary monetary supply in order to enjoy the benefits of economic growth. To Jeff Booth's point, as technology improves, as humans become more efficient and more productive, and you have a stable, non-inflationary monetary supply called Bitcoin, you will see ever increasing benefits. You will be able to buy more and more with less and less money over time, and that is the beauty of Bitcoin.
Yeah, absolutely. I agree with you, and let's explore that a little bit, right? And I think you drop little hints, you drop little hints here and there, right? Versus, and you were calling it the fiat mindset, right? That's what you called it. And I had a conversation with CK, and he calls it the fiat operating system versus the Bitcoin operating system, right? Do you, and I really believe this, and maybe this is kind of getting into like the spiritual philosophical conversation, right? But I really believe that fiat mindset is really responsible for a lot of the political ills or the divisions that we're seeing. And I think that people inherently know something is wrong with the system, but they continue to like seek like a political solution versus the political solution has been captured, right? The incentives of politicians is not to serve their constituents. It's really to get as close as possible to the money spigot, right? So what are your thoughts on that? Do you believe, and you are a doctor after all, do you believe that that fiat is bad for the soul and Bitcoin is good for the soul, and why you believe that is?
Well, it's all about incentives, right? So Bitcoin literally incentivizes honesty. Like if you're dishonest and you try to game the system, all you do is you waste energy, and energy production is costly. You're wasting that. And so you're incentivized to not waste your money and waste your time. And so Bitcoin incentivizes you to be honest. It's an honest unit of account. Everything Bitcoin touches, it forces into an honest unit of account. Who does not like Bitcoin? People who don't like to live by an honest unit of account. Who doesn't like to live by an honest unit of account? Politicians. They're number one, right? We talked about the debt ceiling that goes up forever, that it's a fake, it's a false narrative that there's a ceiling to their debt. It just goes up and up and up and up. It's a pretend ceiling. It's a false narrative. They hate the idea of Bitcoin. They hate the idea of being held accountable, of having to actually balance a budget. It's literally like a joke in politics to consider balancing a budget. Companies who have learned to get around the system, to work to game the fiat system, again, hate it, right? And so it's a condition. It's a condition of incentivization. So fiat incentivizes, all of these other behaviors. It incentivizes borrowers to borrow as much as possible. It incentivizes people to consume, right? We hear all the time that the U.S. GDP is 70% consumption based. So what does the government do? What did the Fed talk about? They want people to borrow money and to buy stuff. It doesn't matter what it is. You can buy just nonsense, garbage, crap, plastic little trinkets. They don't care. That drives GDP growth. They like that. It drives the economy. That's what gets incentivized in a fiat system. It's totally the opposite again with Bitcoin. It does not. Bitcoin incentivizes you to save and to think very long term, right? And that's very, very, very different than the world we live in right now. And again, if you're fiat brained, if you grew up in the system, a lot of people, even very smart people, can't even imagine another world because it's sort of like a fish imagining life outside of water. You can't. It's just what you grow up in. It's your environment. It's everything you breathe. It's you're breathing in water and extracting oxygen through your gills for it. Like you can't even imagine life outside of water. And so the fiat brain folks, bless their hearts, they're all pre-Bitcoiners, so I don't get on their case. Even the most vocal anti-Bitcoin critics, they're coming around eventually. It's just going to take some longer than others because their fiat brain is so strong, and we just have to continue to work with them.
Interesting. Okay, so you're saying continue to work with them. Maybe simply because we have to cover the daily news and we're slaves to the news cycle. Like we kind of see the reactions, so to speak, by government. Like today, for example, it came out that the European Union, they're trying to, like, good intentions, of course. They're trying to basically pass this law that would force message providers to have to share all their messages with the government, and then the government would have like this like kind of filtering system. But it's impossible to do that with open source software. So it would be a de facto ban on open source software. You could say that's a de facto ban on Bitcoin. And if they're not okay with you sending certain types of messages, what makes you think they would be okay with you transacting with people? So what about them? Like, what about them? At what point does it get to where you're just like, look, I opt out. I make a joke with Opti all the time. I'm like, bro, there's a 50-50 chance we're going to move to El Salvador. Like, I'm just letting you know. We might have to pick up and just leave. Right. So what are your thoughts on that?
We're clearly moving into a dystopian world, right? And we're already here in many ways. You brought up CBDCs earlier. You brought up there's just complete invasion of privacy. It's obviously worse in China, but other countries like here in the U.S. and in Europe, they're picking up on that and they're moving towards a more dystopian, more controlling central command type future. And that's because they're crumbling, they're getting desperate. I think the moves that we're seeing coming out of the WEF, their suggestions to basically control everything from our diet to our spending to our messaging to just every parts of our lives, to giving us a social credit score. These are these elite people in power that want to maintain power, but they're watching it kind of start to crumble. And they're seeing things like Bitcoin and these decentralized systems. The internet, right, was the first sort of step towards that, the sovereign individual. It's basically what started to seep power away from these central authorities who have this monopoly on power. It was the only solution around it. You can't defeat America by being more powerful than America. You have to do a workaround, and that's what Bitcoin was, is the sly workaround. And it's facilitated by the internet too, obviously, and the ubiquity of the internet. And so I look at all of these moves as they're acts of desperation by these dystopian governments, and who are actually, the more desperate they get, the more dystopian things get. And at some point, the citizens are like, you know what? This is insane. I used to kind of be pro you government, pro whatever government. I'm out. This is crazy. Like, you guys are just pushing the line too far. You've taken all of my privacy. You're trying to control every aspect of my life. I want out. And we're seeing that, right? And it got way worse with COVID and the response to COVID. And it's getting much worse too with central bank digital currencies. It's getting worse in every single way. These are the last gasp, the last ditch maneuvers from dystopian governments to get even more controlling. And the people are rising up and rebelling. And now we actually have a way out. We didn't have a way out before, but we do now. With the internet, you can be completely decentralized, and the government can't stop it. Bitcoin cannot be stopped. There's no possible way to destroy Bitcoin, the Bitcoin network. As long as like one node exists, Bitcoin still exists. And so the government, they're starting to see the writing on the wall, even though some of them probably can't put a finger on it. You can see signs of desperation everywhere, and it's not going to be pretty, by the way, either. I don't see this as some sort of peaceful, calm transition. I think it's going to get even more tumultuous. over time. And so thankfully we have a way out. Thankfully, I think it's just sort of inevitable that Bitcoin wins and that decentralization will win eventually, but it's going to be when you look back in history, we'll see this, I think, as kind of a revolutionary time, as a major paradigm shift in our culture from centralization to decentralization. And that's facilitated by the internet and facilitated by Bitcoin.
And I completely agree. Some people call this moment in history a fourth turning, right? And I agree. I think this is a pivotal time in people's lives. Unfortunately, my generation was the one that kind of got the brute force of it. So in a way, like, we're a little bit more militant about it. And Dr. Ross, I would say, and I've had conversations with people about this, is this a generational thing? Like, is this going to take full generations for people to get out of this high centralization mindset? And yeah, centralization, I think if you look at it in the grand scheme of things, I think it's worse than decentralization, but it also has benefits. And those benefits are people can outsource personal responsibility to either large governments, banks, if it's the storage of their wealth, also health too, right? Which I think is a disaster. Education, right? I think it's been a disaster as well, right? But they are benefits, and the benefits would say, if you are someone, that, man, I don't know how to say this nicely. If you're someone that benefits from that type of system, I'll say it like that. If you're someone that benefits from that type of system, you are a loser in this decentralization that we're heading into. And also, the sovereign individual talked about this, about how this transition was going to affect a certain type of person.
Absolutely. There will absolutely be winners and losers in the next system. And I think we've talked about this on your show before, but I agree. There are people, I mean, let's call them sheeple, right? There are the sheeple who are just fine giving up their privacy and their freedoms in order to have the protection of the state, in order to get fed by the state, to receive money from the state, to receive housing from the state. They're not entrepreneurial. They don't want to start a business. They don't have ambition. There are tons and tons and tons of people like this. They're just fine sitting at home, watching TV, playing video games, as long as a check comes in and as long as they can go get, their junk food, their fiat food to feed their fiat bodies and to feed their fiat brains. They're super happy. These people will hate the Bitcoin standard. They will hate it because they will hate decentralization, because with decentralization comes personal responsibility. People who are not responsible don't want personal responsibility. They want less responsibility. They look at that and they're scared of it. They're like, I don't want to have to manage my life. I don't want to have to think about other people and take care of other people. I don't want to have to take care of myself. I want to be taken care of. I just refer to them affectionately as sheeple, bless their hearts. Those are the people that we're going to be sort of clashing with along the way, and who will not like this new system and who will not benefit. And their overlords, right? The politicians, the Jamie Dimons, the people who benefit in the fiat system, they dole out a little bit. They give them, free money into their bank account. They tell them you can't go out, you have to wear a mask or whatever. And I don't want to get in the COVID thing, but they tell them what to do. And they say, okay, we don't want you going out, and here's some money in your bank and vote for me. Those are also the people who don't like this new system. They don't like the personal responsibility system, because in a system of personal responsibility on a Bitcoin standard, you don't need governing officials. You don't need people bossing you around and telling you what to do, because you figure it out yourself. And if you're generally not very smart, and this isn't even a rip on people, right? The average IQ is 100, right? So everybody above 100 has above average intelligence, and below is below average intelligence. For people who are below average intelligent, it's hard to get by. It's hard to be responsible. It's hard to have a good job and to make a good living, and to support a family. I get all that. That's like a legitimate thing. So all of that changes on it's literally just a massive paradigm shift. You brought up The Fourth Turning, by the way, and I'm all about that. I think that's an awesome book, and I agree with that, and the cyclicality of humanity and all of these cycles. This is more than that, though. This is more like sovereign individual stuff, like an once every 500 years shift in humanity. I think that's what we're like. It's a printing press and industrialization moment for the world. I think the internetization and decentralization and Bitcoin basically are going to cause like literally an entirely whole new world, a whole new way of life for humanity, and it's just massive. And I still think most people don't even realize it yet.
Yeah, and I agree with you. Most people don't realize it. I think the global South is going to catch up on this a lot quicker than the developed world, just because they're incentivized to going back to incentives. Um, so, Dr. Jeff, we have about 5-6 minutes left. My question to you, and I guess it would question for the audience, right, is what advice would you give investors and Bitcoiners heading into the next 6 to 9 months?
Oof. Okay, first of all, I am an investment advisor, so I can't give personal advice, right? So these are just
This is
general thoughts. General
generalization.
thoughts, right? Keep an eye. So this is coming full circle now, to what we were talking about at the very beginning. I'm very bullish. I think that I was bearish literally from basically January 2022 through the second week of January 2023, with a couple of exceptions. I'm bullish for now. So I would say that sitting on the sidelines and waiting for the inevitable recessionary bear market that everybody knows is coming, you may be waiting for quite a while. I think for Bitcoin itself, Bitcoin can rip and melt faces off, right? It can rip really high, especially if Bitcoin happens to go above its 200-week moving average, which is sitting at about 25,000 US dollars. That's kind of the last major momentum hurdle. That's what will, I think, bring in larger institutional money back into Bitcoin as well. If it does that, it could go much higher and it could do it really quickly. So I would sort of behoove people, or, I got to be careful what I say. I would just be careful about sitting on the sidelines and just waiting because things are going to get terrible. At some point, things will get bad again, but in the meantime, things look pretty darn good. So Bitcoin itself is meant for saving, right? It's better money for a better world. We talked about all the reasons why. It's incentive structure, blah, blah, blah. It's scarcity. Try to have as long of a time horizon as possible. Think about it. It's what I tell my clients. Think about Bitcoin like a retirement account. You don't put money in an IRA and think you're going to spend it in a month and get concerned if it fluctuates and goes down. Think about Bitcoin as something that you hold for as long as possible. Ideally forever if you can, right? You want to find ways to not spend your Bitcoin and just to save it. I tell people to try to have a minimum of a 10-year time horizon. I think if you have a 10-year or longer time horizon, this is just an absolutely fantastic time to be purchasing Bitcoin. My opinion, I could be wrong, but I think it will be much, 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 much higher 10 years from now than it is today. I think it will outperform basically any other asset throughout this decade. I think people who are used to 60/40 stock bond portfolios that did really well from basically 2010 to 2021, I think they're in for a world of disappointment over the next decade. I think it's going to be a really tough time to buy and hold and just to sit in your stocks. It's going to be lots of choppy sideways action, probably. And it's probably going to be disappointing in real terms if you factor in inflation. I don't think a lot of gains are going to be made because they're still so overvalued. So that was sort of a run around your question. It's hard to say what's going to happen in the next 6 to 9 months, but for now I'm bullish, and in the very long term with Bitcoin, I'm extremely bullish. So I can stop with that.
I share that sentiment. And just to be specific, you did give me the individual investing advice for me is, Nico, you have to buy a crap ton of Bitcoin. He was typing it in the back, and I'm just totally joking. So Dr. Jeff Ross, real quick question, right? What would be the warning signs that we're exiting this temporary bull market before we have to pay the piper, so to speak?
Yeah, so all of the reasons why I said I'm bullish right now, I would look for those things to reverse. So I can just give you a run. These are what I look at. Everybody has their own indicators, fund managers do. So here's what I look at. I look at the high yield OAS, so the options adjusted spread. If that goes right now, it's decreasing, that's bullish. If it starts to go higher, that may mean we're heading into a credit type event, which is not good. That means the floor could be ready to drop out under risk assets. So if you see OAS, the high yield OAS spreads start to widen, that's a concerning sign. If you see the dollar start to strengthen, warning. If you see VIX start to ramp up volatility, especially if it gets into the 20s and then even up as high as 30s, that's usually scary times. That's usually because the floor is dropping out under risk assets. Bitcoin is a fantastic barometer because it's the world's freest market. It tends to forewarn people when times of crises are coming or good times are coming. Right now, I would suggest it's signaling that good times are coming, and it's been signaling that for a couple of months now. So all of those indicators, just pay attention to that. The other thing is oil. Oil is kind of surprisingly low to me. That's the one thing that's sort of off for me. It's sitting right around $77 a barrel right now. Oil is another thing that when you see that start to drop, that basically means the world's economy is grinding to a halt and people aren't using it and bidding up the price of oil. So if you see oil start to crash significantly, that could be another sign of badness coming. Those are the things I look at. Right now, all of those indicators I just mentioned are all moving in the bullish direction. And so I'm bullish.
Awesome. I'm bullish too. I'm always bullish. Uh, sometimes I shouldn't be, but I am. It's maybe to my fault. Dr. Jeff Ross, thank you so much for joining us today on Simply Bitcoin IRL. Why don't you tell everybody what you're working on these days and where they could find you online?
Sure. So, I manage a fund and some investment advisory, separately managed accounts at a place called Vailshire. You can look at vailshire.com to find that. On Twitter, my handle is at Vailshire Cap. That's just kind of my personal account, though it has nothing to do with Vailshire. And then I actually just today signed up for Damus, which is the Noster dealio, which for me is challenging because I'm not very tech savvy. But I created an account there, so I'm excited for that to see how that's different. And